Hey everyone, it's Evan here from the Trade Risk on Tuesday, November 14th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So today's the first video on a Tuesday schedule. Remember, going forward, we are switching the usual Wednesday midweek videos to Tuesday, and we'll run a Tuesday and Friday schedule. And you can see here a slightly new format. We get this nice green highlight reel box talking about or listing some of the topics we're going to discuss in today's video. So we got stocks gapping lower for the fifth day in a row to start off the session. We have the number of stocks making new 52-week lows on the rise, starting to outpace the number making new highs. And we also have holidays fast approaching. So let's get into the charts right now and cover all of this and some more. All right, let's kick things off here with the S&P 500, the SPY ETF, and you can see we finished lower 23 basis points here on Tuesday. That's down 60 cents in the SPY. If we take a look at the action over the past week or so, you can see a couple of things going on here. We've pulled off of the all-time highs that we made above 259 late last week, and we have sort of settled in between this yellow and blue line on my chart. That is the 20-period EMA and the 8-period EMA, and we're kind of just moving along sideways here, really just chopping it out and not really, making any definitive move one way or the other. You can see we do have some tails kind of coming in here over the past several sessions, or basically all of November. As we start to sell off intraday, we do see these dip buyers start to step in right around this 256.50, 256 and a quarter level. Same thing happened today as we got down around that price. Price reversed. We saw the dip buyer step in and we closed near the highs. So something to pay attention to for you active traders looking for a real near-term level. I'd pay attention to this 256 and a quarter level, 256.50. If we start to lose that, that might give us some more signal that we do have a bit of a larger retracement or pullback to sit through, perhaps back down to this 254 level. Now, if we look at the character of the market over the past 5 or so days, you can see we get this new pattern that emerges where we're opening basically for the past 5 sessions consecutively to the downside. We're starting off with this gap lower. It started right here on Wednesday the 8th, but you can see we finish each session, near the highs. So you can see again, we opened down on Wednesday, closed near the highs, opened down on Thursday, closed near the highs, same thing Friday, yesterday, and today. So a new pattern there, something to pay attention to. We are ultimately closing near the highs. That means dip buyers are sort of stepping in. They're not letting basically the market completely fall apart here, but it's something to take notice of. If we go to the weekly chart, you can see this trend is still strong. We are starting to move sideways. Over the past 3 weeks, we've gone nowhere. Actually really the last 4 weeks, almost 5 weeks, we've gone nowhere in terms of higher prices here in the S&P 500, but that's not necessarily a bad thing. It's not a sell everything. We've had a real strong run basically ever since September, and certainly even longer term throughout this entire year to the upside, and moving sideways, basically digesting through time, is a healthy way to sort of work off those overbought conditions or the strong run that we saw throughout the past several months. So something to pay attention to. Again, I would again look at this 256 and a quarter level as it represents the past 3 weeks. If you want to include this week so far, only Tuesday of trading, but if you want to include this week, the past 3 weeks have found support and have made a low right around that 256 and a quarter level. Another reason why you probably want to pay attention to it. If we go back to the daily chart here, the one last comment I'll make on this is, looking at market internals, like we talked about at the top of the video here, we are seeing the number of stocks making new 52-week lows continuing to rise. And in fact, I haven't looked at the final numbers for today yet, but we may actually have a flip where we actually have more stocks making new 52-week lows than we do stocks making new 52-week highs. If that trend continues, if we continue to see weakening breadth, and we continue to move sideways in this consolidation, that would be a bit of a concern. That would be a red flag that we are moving sideways. We've pulled off the highs, we're moving sideways, and we're seeing breadth sort of weaken underneath the hood. That would not be a good recipe. But I will say that in 2017 every time we get to these types of levels where we've pulled off the highs, we're testing support, market internals start to diverge or weaken a little bit, that's when the magical bid shows up. And, 1 week later, we're making new all-time highs. That's the type of market this has been in. As soon as you're starting to get nervous about, the change of potential trend, even in the short term, that's when the magical bid shows up. So we got both sides here. It's something to pay attention to. It's never an easy decision. Basically, the way to combat that, certainly the way I try and combat that, is not to be all in one way or the other. So you don't have to be 100% all in committed to this market, full on, exposure. You can dial back and keep 30% cash, 35% cash, whatever that number is for you. And you can have that kind of like 1.5 feet in the door. And if we start to improve, if that bid shows up, then we can increase that exposure. And if it doesn't, if we start to unravel, if we start to break below 256, you start raising those cash levels and stopping yourself out. Just a way to potentially navigate it if you're an active trader. Again, you got to know your time frame. So that's the S&P 500. Those are a few things that we're seeing here. If we go to the IWM, this here is basically been the weakest. It's been consolidating over the past 5 or 6 weeks. It's been the weakest on a relative basis over the past month or so. But remember, we had this huge run in September, and now we're basically pulled back 6 weeks now off of the highs here from 150, and we are again below this 8-period EMA on the weekly chart, above the 20-period EMA there on the weekly chart. And if we look on the daily chart, you can see we're just kind of moving sideways here and basing out. Volume's been pretty light over the past 3 or so sessions. We still have a position in this market. We bought into the IWM arguably early, potentially wrong, here on Wednesday of last week. We still have this position still on. We said we'd give it some room. If we start to break definitively and accelerate lower here from these lows, that would be an exit for me. I would call it and move on from there. But if we can continue to sort of stabilize here and lift back above this 147 area, that's obviously the ideal situation. That would be kind of sticking with the overall longer sort of trend and perspective here, that we had this big run up and breakout in September. We've pulled back about 20% of it, and then we would start to stabilize and move back to the upside. We'll see, but IWM certainly has been cooling off and just basically moving sideways, grinding people out for the past several weeks now. We'll see how that acts heading into the end of the week, and we're going to be watching this support down here right around 145.50 or so, which is where recent lows have been. So Qs are next, and you can see Qs continue to remain basically at highs here. We've pulled off just a bit from the highs, but moving still above the 8-period moving average, or right at that 8-period moving average. Reluctant to have any more of a dip or meaningful pullback so far, but you can see we do have some tails kind of coming in here from today's session, last Thursday's session. So this 152 level, 152.50, that's basically where I'd be watching there in the very short term. Then just pay attention to those moving averages. But so far, best in class right now is the Nasdaq 100. So that's the market environment overall. Let's get into some other markets here. We'll go to TLT next. If we look at the weekly chart, you can see we're up almost 1%, and we're still kind of looking at this messy picture here, looking at a weekly chart. The moving averages, the fast 8 and 20 period weekly moving averages here, flat, completely sideways, and price is right at them. That to me is a market that has sort of a lack of immediate trend and more or less is a headache in the short term. I'd be watching this 126, 126.50 level. If we get above there, then we could probably get some momentum to pick up in this market to the upside. And on the flip side, back below 123, if we start breaking below there, that's when I'd become more of a bear and aggressive seller on this market. As we chop in between in this 3-point range, it's nothing that I certainly want to play with, and I'd just be waiting for a little more directional certainty there in the TLT, in the long treasury bond market. Next, if we go to USO, we had a rough day for oil today, pulling back. It's had a great run though. So if we look at the weekly chart here, this has made a strong move from $10 all the way up to $11.50. So a pretty strong 10-11% rally there in USO. We're giving a little bit of it back now here on the weekly chart. You can see still looking very healthy. So depending on your time frame, you want to pay attention to this dip as we start to come into this 20 period volume today. today, it was above average, but it was nothing crazy, especially given a 2% move to the downside. It wasn't all that high. So something to pay attention to, see if it can stabilize around this 20-period moving average, maybe puts in a higher low. If you're looking to get involved in USO, maybe that's your opportunity in the near future. Natural gas also pulling off today, same thing, 2% to the downside. This one technically in a bit of a rough or not as pretty of a scenario here. It has a ton of supply right in the 650 level. It had a strong sharp move above it or into it, testing it. It's now pulling off of it. I'd say as long as we're holding above 620 or so, it still has good merit that this was a nice kind of false breakdown and a sort of buyable low or something that you could measure some risk against. I don't have any position in this market at all right now, but pay attention to it. If it stays above 620, I like it. If it starts breaking below 620, then, all bets are off in my mind, and I'd be a little more suspect here. So see if this can stabilize itself into the end of the week. Getting back above 650, 655 though, and through this supply is ultimately what I would want to see for a more meaningful bottom to get put in here in natural gas. If we go to the metals next, we'll go to GLD. You can see here in GLD, we had an up session today, still pretty quiet and getting really tight in here. It's still holding on to this 120.25 level, which is, basically the lows here from October. It's hanging on there, a lot of overlapping supply. There seems to be a move brewing here in the metals. Silver and gold both have this very tightening, a lot of overlapping candles here and not making much movement, directional certainty one way or the other. And silver, basically the same exact thing. I'd be paying attention to this now. In fact, we're still involved in silver. If you recall a video or two ago, we talked about the entry that we had in silver right here on this session on the 1st. Disappointed that it didn't get that immediate follow through, but it hasn't done enough to really stop me out yet. So I'm just kind of patiently waiting and giving this some room to sort of chop itself out. But once again, it does seem like silver and the metals are ready to start to make a directional move, either higher or lower, perhaps set up a nice strong sort of trending market into the end of the year. Let's see which way that unfolds. You can see here the levels are pretty clear, above 1626, below call it 1585, 1590 or so. Those would be the bounds that I would be paying attention to in silver. So that, I believe, is everything on the major markets. Let's look at some of the sectors that we want to take a look at. We got XLU now, the defensive areas that are really sort of exploding here and taking off to the upside. You can see XLU. Look at this weekly chart, real sort of stealth rally, just grind rally up, 2 new highs here and up 2.45% here on the week alone, mostly from today. Actually, I mean, it was equally from today and yesterday, both up over 1%. And you can see just really stretching to, to some new nosebleed levels and to new highs here for utilities. Staples, same exact thing, seeing a sharp move higher. If you recall, I think it was our last video, we talked about this 2-day very sharp move here, and it's something to pay attention to. And it certainly did start this wave higher, as it's basically been nothing but up and up since this 2-day move here late last week or mid last week. So staples and utilities both seeing a strong bid, defensive areas of the market starting to get a little bit of love here on the rotational basis. We also still have the healthcare ETF trying to hold on here at the September lows. We're looking at this to be the lower end of the range. It looks to be in a vulnerable spot. We don't want to see it kind of break and accelerate lower, but it is just clawing on to support here right around this $81 level. So I think it's still worth paying attention to. I'd like to get it, basically above a prior session's high. If we can start to clear back above 81.50 or so, let these moving averages flip. But I think you have an interesting potential range reversal play at hand in healthcare, but it still looks a little bit dicey right now. Let's see how the end of the week shakes up for healthcare. Next, we also have We also have XLY, which is pretty resilient right now, and in fact, making a pretty interesting move. If we go to the weekly chart, you can see it's starting to break out to new highs here in the discretionary ETF XLY. You get Amazon here that's probably helping this. I know it was nice and green today, but there's other components that are still holding up as well, and it is starting to make that significant structural breakout here to new highs, something we haven't seen since June of this year. So XLY, another one that's also pretty interesting and showing some good relative strength recently. On the flip side, we got energy, which really turned down, particularly today. We had oil down 2%, remember, but we also have a significant sort of break back below the highs here from October. We like the push above here, starting this potential second leg higher late last week, but that just failed. Bulls couldn't hold in there. We had this explosive move higher on the 6th, and that was it. No buying pressure, no follow through to the upside. We saw it just kind of slide lower, and now we're back below this $68.80 level. I'd want to see us get back above there, get back above $69. To me, that's where we really want to be to keep that upper level momentum. If we zoom out here, it's not necessarily, depending on your time frame, the most bearish thing. We might just need more time consolidating sideways in between, $67 and $70. But for now, in the short term, if you're an active trader, you definitely get some momentum taken out of the sales here in XLE today. So I'd be a little bit cautious, but I'm still interested in XLE, so I want to keep it on my radar, but it's certainly not set up based on today's session as of right now. IBB also continuing its move lower. It's been in this downslide ever since early to mid-October, and it continues to stay weak, breaking down through support. It had a high volume day today, a little bit of bounce off of the lows. It's coming back into this $300 significant area. If we go to the weekly chart, you can see this was a major level that we saw a breakout from back in June of this year, and we're coming back into that support. I suspect that some interested dip buyers would be paying attention to this $300 level, but we want to wait for that price confirmation, or we want to let this settle just a little bit. This was a pretty, a pretty wide range day today, really underperformed on the session. 8 and 20 period moving average, you can see just sharply heading lower above price. So it's not the most pleasant of sort of environments to be trying to catch a dip, but we do want to understand that it is back to support. It's sold off for a few weeks. So if you're really active, be a spot where you could probably be paying attention to IBB into the end of this week. IYT, another sector of the market here that has been suffering some pain and some damage here. It broke below this 176 level, which tried to hold its support for a few days, even a few weeks. But that basically, once that broke, it just continued to slide itself lower. On the weekly chart, you can see it's breaking below the 20 period EMA here. So not the most ideal of scenarios or situations to be in. We do want to see IYT reverse and start to, put a bounce higher in if you are constructive on this market. And then finally, XLF, you can see back to some of this support and some of this range that we saw here in mid-October. You can see it's back to $26. It's pulled off of the highs here. If we go to the weekly chart, you can see just getting below the 8 period moving average. So on the weekly chart, that longer term trend still very much intact, but something in the short term to at least cause a little bit of anxiety there, and waiting to see if dip buyers do actually step in around this $26 level. So that's it. That's all I have for today's video. Hopefully you guys are starting off the week on a good foot. Thanks so much for watching. As always, if you're new here, do subscribe to our YouTube channel. If you like these videos, keeps you up to date with all of the latest going forward. Tuesdays and Fridays. I will see you on Friday. Thanks so much for watching.